Good morning, good afternoon, or good evening, depending upon whether you're watching this live or later on the recording. My name is Tim Levey. I'm the chairman of Kreston Reeves. I'd like to welcome you to this webinar, which is the last in our series of Looking Ahead. This one is entitled Retaining Agility, Rain or Shine. Now at Kreston Reeves, we're known for guiding our clients, colleagues and communities to a brighter future. We see a world that's forever evolving, and we want to help all generations embrace the change. Our drive for continued improvement ensures that we understand your goals, support you on your journey, and help you to realise your potential. So as you can see, I've got three presenters along with me. I'm going to ask them to introduce themselves in the order in which they'll be presenting, although these may be familiar faces to you if you're regular watchers of the webinars, because they have all featured before. Firstly, Emma.
Hi, I'm Emma Chesson and I'm a senior manager from our Canterbury office, and I'm going to be giving you an update on the funding market.
Thank you, Emma. And the next will be Andrew.
Hi, I'm Andrew Tate. I'm a restructuring partner dealing with businesses that get into distress, so hoping to share some tips with you.
Thank you, Andrew. And thirdly, Lynsey.
Hello, I'm Lynsey Light. I'm a business advisory manager and part of our Kreston Reeves great team. My purpose is to encourage others to find their voice in business and help them to grow. Today, I will be talking through looking at the importance of opportunities in a crisis.
And as I said, my name's Tim Levey. My purpose is to guide you to make the right financial decisions even when I'm not there. And I shall be covering the topic of resilience and contingency planning. So with no more ado, first up on funding, over to you, Emma.
Thank you, Tim. So how many of you have got a contingency fund? Depending on your business, the general rule of thumb is that you should have at least 3 months worth of expenditure, 3 months worth of cash to cover enough operating expenditure for 3 months. Are you confident that you've got a reasonable contingency for your business? I'm going to give you an update on the funding market and how planning ahead now can help you to retain agility in your business. So firstly, you've got a month left until the CBILS scheme comes to an end. Only 16% of those that were questioned prior to this webinar are actually making use of this. So the deadline is the end of November, so there's still some time and it's not too late. So this is an opportunity to refinance existing loans under better terms or actually go for completely new loans. There's an opportunity to also look through your balance sheet to leverage off different assets in the most efficient, cost-effective way. So you can look through your plant and machinery, debtors, working capital cycles, and for certain businesses, you can get loans against stock. A lot of businesses have already shown agility around pivoting their business operations and shown resilience to open up new opportunities despite the challenges that have been faced and will continue to face in the coming months. These businesses will have looked at scenario planning and consideration about what the biggest impact on your business will be. So now is the time to look at pivoting how you finance that. Financing those plans as government-backed schemes come to an end is really going to be important. There's undoubtedly going to be tightening credit policies going forward, with less unsecured facilities being offered. The more that you can leverage against your balance sheet, the more you're able to open up some opportunities. So do you have enough funds to see you through your worst case forecasts? Interestingly, 83% of you said that you either aren't sure or aren't ready for opportunities coming up in the next 12 months. Unlike in 2008, there are buyers in the market actually looking to acquire good businesses. So what level of growth are you after? Growth by acquisition is usually faster than organic growth. So broadly here, there are 3 camps. Businesses that are still affected by COVID-19, keen to progress existing development strategies. Businesses looking to grow through acquisition and see opportunities in acquiring businesses that might be struggling due to the pandemic. I mean, here we're not necessarily talking about quoted PLCs. These could be local businesses that have got turnovers around £4 million looking to acquire similar sized businesses. And thirdly, many private equity investors have significant funds to invest and are actively looking for growing businesses who are in need to have investment to fulfill their growth plans. So considering a sale or investment can be a really daunting process. So you should seek specialist advice if this is something you're considering. We've got a lot of experience in supporting businesses through this. Overall, the level of agility that you'll have will depend on your financial position. So what should you be considering now to help? Don't ignore the opportunity to make use of government-backed schemes while you still can. You can borrow now to create a war chest, interest-free for 12 months. Don't forget that you're able to access CBILS for other types of finance, such as asset or invoice finance. You can actually have more than one CBILS as long as you don't exceed the £5 million limit. And don't ignore the opportunity to refinance existing borrowing over longer and better terms with a capital repayment holiday for at least 12 months. When approaching lenders, ensure that you can show scenarios that you've modelled ranging from best to worst case with supporting rationale. You stand a much greater chance of success with an integrated package of information which ties together the future balance sheet, profit and loss account and cash flow forecasts into one concise document which a good accountant, such as us, can help you to produce. It's always best to approach existing lenders first, as they've obviously built a relationship up with you over time and they know how your account's been managed. If your existing lender can't support you, then we at Kreston Reeves are able to support you by producing a funding request. We've got access to over 100 prospective lenders via an online funding platform, which includes access to unsecured finance. And lastly, you should also review your growth plans. Is organic growth going to get you there, or would a merger or acquisition work better for you? Again, we've got a team here at Kreston Reeves who have experience in offering strategic advice to businesses looking to develop both organically and by acquisition. So I'll hand you back over to Tim.
Thank you, Emma. And if you had any questions for Emma, in fact, for any of the speakers, please use the questions facility, which is on the bar. So we invite questions. We'll deal with those questions and answer sessions at the end. I've got a couple coming in already. So next up, Andrew, and what can you tell us about crisis planning, please?
Great, thanks, Tim. Well, just to put this into context, obviously I said at the beginning that I work with distressed businesses, and clearly there is, I think we are expecting a lot of distress to come. Various businesses, what really surprises me is that there are businesses in all sorts of sectors and niches which have been impacted by the lockdown and what's happening at the moment. And we can't really imagine all of the trials and tribulations that are going on without actually knowing how these niche businesses are actually dealing with it. But what we're seeing mostly is businesses starting to run out of money, and that's really what we want to try and get across in this webinar, that actually the cash to fund the business to look for opportunities is so important. So next slide, please. What I'd like to do is just run through the overview of, I suppose, the key areas that I want to cover. The first is to look at strategy, to look at scenario planning, to look at the operations of the business, and to look at governance as well. And I'll come back to that because that's quite important. So strategy is important. Looking at risks, the typical sort of a risk assessment tool is a pest analysis, looking at political, economic, social and technological challenges which could be ahead. And I think we may see some of all of those coming up in the next year or so. And then looking at scenario planning, that helps to look at risk assessment as well. And the other thing that businesses could usefully consider when looking at this is a reserves policy. Thinking about what funding might be needed if the business had to go into a wind down situation and cease trading without it going bust. Next slide, please. So just to mention very, very briefly, we have operational challenges, and I think just some principles here to protect income as far as possible. That's really important. Obviously, it's pretty obvious. Provide as long a runway into a crisis as possible. This allows you to look at all of the potential options, whether it's sale, whether it's rebanking, whether it's getting further investment in. So it's really, really important to have a long runway into a crisis. And as I've said there, resources may become very restricted very quickly. Communication, I'll talk about that a bit further, but really just to the importance of communicating very regularly with stakeholders. You may need them to dig deep, you may need their relationships as you go through perhaps a crisis. But don't compromise on health and safety, people responsibilities, etc., because where there are penalties for not adhering, for example, to health and safety, it's simply not worth going down that path and compromising on it. Okay, next slide, please. So scenario planning. This is to a certain extent cross-referencing with the other presentations today. Scenario planning is invaluable on a practical and financial level. And really that point about sort of taking some time out to think what could go wrong. It's a horrible thing to have to do, but actually to sit back and think about what could go wrong, this risk assessment process that I was talking about is so important. So it's looking at the realities, looking at assumptions, what do you believe that actually is going to happen in your business and what could go wrong. Think about what you can control and what you can't control. So in accountancy, there's a concept of fixed costs and variable costs. Variable costs you can control, but there's lots of things that you can't control, and you perhaps need a bit of a run-in to be able to control those. If you, for example, you have to give notice on a lease on a property. Focus on the main drivers for your business. Don't get too complex. Keep it simple, and look at sort of your best case, medium case, and also look at the worst case, which is what we're just going to touch on next. Okay, so if you just go forward, next slide, please. So I just wanted to run through some of the points about looking at scenario planning. I talked about a runway for crisis management. And what I think is really helpful here is just to think about the triggers that you might set for seeking restructuring advice. So what sort of things within your business could be triggers to look at a situation perhaps where things are getting a bit dicey. It could be going out over your overdraft limit, although you would hope that a business would plan not to go over its overdraft if it can possibly help it. But taking those triggers, taking them on board, thinking about what they are, and then taking action when the trigger has been sounded, whilst there's still a runway, is a really responsible and proactive thing to do. I think it's also important to look at the point of no return. So the point of no return, when really the business is just into a wind down situation and you know that you're not going to be able to pick it up and go forward in the future, then really I think from that point of view, you need a restructuring professional on hand to be able to help you to assess the risks and the benefits of going forward. What you might think is a point of no return may actually not be that, but you need professional advice to help you to know how you navigate your way through the next few stages, which we call the twilight zone. So you really need to have some help with that. Cash flows can help as well, and I really want to emphasise that actually having cash flows both help you to actually keep a really sound handle on your business, making sure that you know exactly what's happening, but it also allows you to model what might happen in the future. The number of different financial touch points that affect a business, whether it's collection of debts, whether it's payment of liabilities, the timing of those is all so complicated, even in a very simple business, that actually to be able to put those down in a cash flow and to be able to then actually scenario plan with the cash flow is really, really important, because it can throw out things that you just wouldn't necessarily have expected, where you might have more cash than you think that you would have, or where actually you're running short on cash. I put in there that the wind down reserves calculation being invaluable. I've talked about that before. The minimum amount you need to be able to close down the business without going bust. This is less likely to happen if you know what that looks like and you can track your performance. Okay, next slide, please. Okay, so the worst case is really important to model, but it's also important to think about your operation and to think about how you can actually change your business model to gain more income. And one of the things that I've noticed, and I think we've noticed within Kreston Reeves, is that businesses that are being successful in this current environment are thinking digitally. So wherever possible, they're moving away from their sort of face-to-face interaction, whether it's with customers, whether it's with the public, whether it's with business, and they're thinking digitally because obviously it's COVID safe. So think laterally about your business, think laterally about the risk assessment, and think how you might be able to diversify using that pivoting word, if at all possible. And communication is so important as well. Obviously, clients, where service levels may be impacted, you need to speak to your clients. Employees is really important as well. There are some businesses which will hold back from talking to their employees about a crisis, and actually it's a bit of a false economy, because employees do sense when there is a problem within a business, and actually speaking to them generally brings them on board. Everybody wants to be able to work, and there is a balance to be struck about telling employees too much, because your good people may look for opportunities elsewhere. But generally people appreciate honesty and would really prefer that an employer starting to face difficulties is quite straightforward with them. Suppliers and landlords, I've said before, this is a really stressful area, but you may need their help, so it's best to try and keep in touch with them and be straightforward with them if you can. Banks and other funders, again, speak to them openly, speak to them at an early stage, and give them confidence in your abilities. Don't present them with problems. And the same really goes to shareholders and other investors. And there's also the question of external messages as well. If your business is high profile and having difficulties, then it's worthwhile thinking about how you get that messaging out there. And then just finally on this slide, directors, meet frequently, record your decisions, make sure that you know exactly why you're carrying on if you feel that the business is in a difficult state. And then just very quickly, I just want to talk about the liability of directors and trustees. Obviously, as a limited company director, one has limited liability. So if you act reasonably and responsibly, generally the corporate veil can't be pierced. But you do need to be careful when the business gets into a potential insolvent situation. You do have to start thinking very carefully about the creditors of the company and making sure that you take every step to try and minimise the loss to creditors. I've mentioned directors and officers insurance there. That's really important as well. If you haven't got directors and officers insurance, it's well worth looking into, just in case something happens that you can't avoid. And finally, I know that I'm running out of time, just to talk about wrongful trading rules. These were relaxed earlier in the crisis, but they're now in force. And what that means is that you really need to look at the point at which the business might be getting into difficulty, and make sure that you're taking professional advice and doing everything that you can to minimise any further build-up of debt. I'll leave it there, Tim.
Lovely, thank you, Andrew. And that was good. I've got a couple of questions coming for you later, so don't go away, please. Next up, we've got Lynsey Light, who's got quite a nice topic, because in every crisis there are opportunities. Isn't that right, Lynsey?
Yes, thank you, Tim. And thank you to the other speakers that we've heard from already. They've all laid the foundations quite nicely for me. So here goes. I'm going to be stressing the importance of looking for opportunities in a crisis. From our survey that was sent out before this webinar, only 16% of you felt ready for opportunities that may arise in 2021. So I'm hoping to spread some positivity and help you to see that there will be opportunities out there, and be ready. Now is not the time to give up. Let's face it, we are in a crisis, an L-shaped recession that we have not faced for decades, since 1987 in fact. Most of us will not have experienced running a business through a recession like this, so it is all new territory. So what is the most important thing to remember when in a crisis? John F. Kennedy once said that the Chinese used two characters to write the word crisis. One stands for danger and the other for opportunity. In a crisis, be aware of the danger, but recognise the opportunity. and that could not be more true. So if we break this down a little bit further, firstly, we have danger. Prior to COVID-19, we saw a steady growth in the UK. Since COVID hit, we have seen restrictions on socialising, trading, travelling, which has had a huge effect on our economy. We could even see further lockdowns yet to come, with the new 3-tier restrictions being enforced. How do you feel about this? Are you ready? So most businesses out there will have spent the last 6 months concentrating on survival, whether that be cutting costs to steady cash flow or even the opposite, trying to keep up with a surge in demand. This is the shock phase. Admittedly, we are all feeling a little deflated right now, just trying to stay afloat, and that is perfectly normal. You are not alone. But the next step is to move into the recovery and rebuild phase, and you do not want this phase to sneak up on you. So this is when you need to be ready. You need to have one eye open, looking for opportunities out there. We will still see the market struggle, but now is your time to reevaluate and start to refocus your business plans. I keep hearing the phrase cautious optimism, and I think it's a great way to sum this up. You are generally optimistic and confident, but you do accept that there may be difficulties. So now we start to look at the opportunities, which I'm going to break down into 5 different areas to consider. Firstly, one option is to reassess your growth plans. Your previous strategy will no doubt need revising now to account for the changes, not only within your business, but also within the market and even the world. So now is the opportunity to look for any gaps in the market. Now that everything is shaken up, it's created opportunity, and there might be a gap for you somewhere to be innovative or diversify. Is there a change in your customer needs now? How can you adapt your business to meet these needs? The situation hasn't been ideal for many businesses, but there may have been a lot of new channels to market open up now. So it is so important to look for these new areas. You may have recently seen that British Airways' last 2 Boeing 747 planes have now completed their final flight. And this is my point. Don't cling on to an old model if it just doesn't work anymore. For lots of us, we will have seen how staff have adjusted and seen their strengths shine through. Whilst many will fear job uncertainty, it is worth looking at any potential promotions of your best employees to ensure that you can keep them happy and retain them. There's nothing more important than having a good team around you. The quote I just love, which may seem a little controversial now, from Richard Branson, is keep the staff happy and they will keep your clients happy. Now I'll mention mergers and acquisitions a little later. Whilst I do appreciate they aren't always best in short term, because they can be quite costly and time consuming, it does lead me on to why it is so important, and now is a great opportunity to assess your financials. I know this sounds pretty stereotypical, an accountant telling you to look at cash flow and numbers, and I'm really trying to change that perception. But as Emma discussed earlier, now is the time to be looking at any finance you might need. 1 month left of CBILS loan. So the opportunity here is to assess whether or not a CBILS loan could help your cash flow. With CBILS, you can borrow up to £250,000 with no personal guarantee, and the terms are very favourable. This is so important to consider now, because once the scheme ends in November, we can't be certain what finance will be available, or even what interest rate or terms. So even if your cash flow isn't suffering too much at the minute, I would highly recommend that you do some cash flow forecasting for the next 12 to 18 months. Emma, I also found your point interesting around looking at your balance sheet to see where you might be able to refinance existing loans or use your assets as leverage for additional funding, especially if we see less unsecured funding options going forward. This could definitely be an opportunity for businesses to take advantage of. So I've already mentioned mergers and acquisitions, which may be something you haven't considered before. As Andrew mentioned, it's important to leave sufficient runway to plan these things. Therefore, the recovery and rebuild phase could be a great opportunity to start to think about this and assess what would work for your business. Look at if you have the funds for this and how much it could improve or even weaken your financial position, but also your position in the market. Remember, growth by acquisition is faster than organic growth. So where do you want to be in 10 years' time? Would an acquisition or merger help you to get there? So if all of this is so important, How is the best way to look for opportunities while still trying to get through this crisis? Ideally, business owners will have an inner circle to help them run the business. This is made up of people who will not only share ideas, but more importantly, be honest. Within this circle, you should aim to have a mix of people who are good at dealing with danger and others who are good at looking for opportunities. And Tim will cover this a little later with resilience and finding the right people for your inner circle. There are no set rules of what to do or how to do it. People need to have the right mindset to guide the business through crisis and to opportunities. It is quite rare that someone is able to focus on both crisis management and looking for opportunities effectively. This is a culture clash. So instead, you need to look at individual strengths and focus on either crisis management or searching for opportunities out there. To finish off, I just wanted to remind you of some of our previous webinars in the Looking Ahead series. We are in an L-shaped recession. The economy is unlikely to show signs of recovering until September 2021. So now is your time. Look at your opportunities and plan for the next 10 years of significant growth. As Albert Einstein once said, in the midst of every crisis lies great opportunity. And on that important note, I will hand back to our chair. Tim, over to you.
Thank you, Lynsey. Very wise words there, starting off with John F. Kennedy and finishing with Albert Einstein and Lynsey Light in the middle. You can't have better than those three very wise people talking to you. Please keep your questions coming in. So the last slot was for me on resilience and contingency planning. And a year ago, I don't think we'd have risked putting resilience and contingency planning as the last one. We'd have tucked it somewhere in the middle, because this would be the place where you might think about turning off. And now, so because resilience last year, contingency planning, well, they were just words that were bandied around. Contingency planning, that was a nice thing to have. It was a bit like a shareholders agreement. I know it's important. I'll get around to it sometime. I'm trying to run a business now. People tending to not have contingency plans. Also known as a disaster recovery plan as well. So I know Kreston Reeves have had a disaster recovery plan for many years because our work is so office based. We've had plans that if one of the offices it has happened around the place, been destroyed by fire, that there are facilities, offices that we could have gone into because we looked at the options and we'd got agreements with people delivering disaster recovery services. When we saw the pandemic coming, our plan had changed. We didn't have offices to go to, but we were pretty set up, we thought, for working from home. And we were doing a bit of testing before things hit to do that. So speaking from experience, we found that a contingency plan was very useful to us and made us be able to keep going. Because if you look at a definition for resilience, and excuse me while I just read this from the corner of the screen, because I couldn't keep this all in my head. If you're defining it for a business, first of all, so resilience in a business would be the ability of an organization to quickly adapt to disruptions while maintaining continuing business operations and safeguarding assets. And actually, isn't that the place where we've all been since March? Concentrating on that, doing that, trying to make sure that we continue business operations wherever we can. And I'd emphasize the bit about safeguarding assets, because most businesses, if they're being honest, would list staff certainly as a key asset. And if you're Richard Branson, it's your main asset, isn't it? So your people need to be covered in this definition of resilience as well. So what does resilience mean as an individual? Well, for me, it's the ability to bounce back from difficult experiences that we all face, particularly in the last 6 months. We might feel that everything's against us. We might have a victim mentality, and we need to learn from mistakes. So as far as I'm concerned, resilience for me is just making mistakes once, making sure I don't make them again. But also, if I think I'm going to be a responsible leader, then I need to keep an eye on my team and be checking in with them and making sure that I'm helping any who I believe might be struggling with their own resilience. So resilience isn't just about you, it isn't just about yourself, it's about the people around you and making sure that they are coping and resilient as well. So the question is, how resilient are you, And how resilient are your staff? Because we've been through a rough 6 months, and there's every evidence that the next 6 months probably isn't going to be much easier. So just keeping an eye on people, and are they looking drained and in need of help? But then what can we, you can always learn from experience. What do we learn from past experiences as an organisation? Luckily, the consultancies, McKinsey, just last year had looked back to the 2008 recession, and they picked 3 key themes for companies who they thought fared better during the last economic recession. And so on the screen, you can see those 3 listed. And number 1 was anticipate and pressure test risks. In other words, have a contingency plan. So they were saying that businesses who had a risk register, who had looked at what potentially could happen, who had done something to manage those risks, tended to fare better in the recession than other businesses. Andrew mentioned the pest analysis, looking at your environment around you. And if you're doing a pest analysis, then it also makes sense to be doing a SWOT analysis, looking at your strengths, weaknesses, opportunities, and threats. And for contingency planning, you're concentrating on the threats, looking at those risks, working out how likely they are, and making sure that you manage the most likely risks. Number 2, so Lynsey was poking fun at us being accountants. Well, we would say this, won't we? But empowering the finance organisation. So businesses who fared better actually had finance managers throughout the whole business, looking at data, looking ahead, trying to work out people's past buying history. Can we use that in some way? What do we know about our customers? Look at the KPIs and focus on those. Businesses who did that fared better. Thirdly, harvesting value from the balance sheet. So you can look at every line on the balance sheet, and people will concentrate, particularly accountants will concentrate on improving working capital, looking at your debtor days, managing supplier payments, managing cash. But I think it's more than that. There are other areas you can be looking at. Are there unused assets that you have that you really should be selling? Are there underperforming business units that are running at a loss at the moment, and that you actually might be better mothballing them to lose less money and preserving the cash? So really anything that soaks up cash isn't delivering value to the company are things that need to be looked at critically at the moment. But to come back to the main point of resilience, it does all come down to humans, doesn't it? A business, if it's going to be resilient, then the people have got to be resilient as well. And there's a need to instill a resilient mindset within your teams. We often overlook the human element. I think in individuals in a chaotic situation, which we've been through in the last 6 months, do actually need to be prepared and educated on how to respond accordingly. It's something, there's something innate in some people that makes some people more resilient than others, but actually I think it is something that you can train as well, and you can put training in front of people to help them prepare themselves. So as partners, we were all offered an hour and a half with someone came to do a webinar with us on resilience and mental health and how to look out for the warning signs. And earlier this year, I was sitting in on some training for the team who we call the Rising Stars, and Emma and Lynsey are part of that group. And they had a day on resilience training as well. And this was before the pandemic hit us. Now, so the trainer who delivered that, I think she is actually one of the attendees today. So I'm sure she won't mind me saying that if you did feel that your staff could do with resilience training, then Jo Rawbone, who's been a trainer for Kreston Reeves for many years, would be delighted to help you out with that. I think she has a ready-made packaged program ready to go for you. And I think the marketing team are just going to pop her email in the chat box so that if you wanted to contact her, then you would be able to do that. So in summary, I think it really is time to get to contingency planning. When we did the survey before this webinar, 2/3 of the people who responded admitted to not having a contingency plan. The follow-on question was, have you tested it? And then therefore clearly that answer was no as well. So I think it's time to get a contingency plan in place and consider whether you and your staff could actually benefit from some resilience training. Good, I can see that in there now. So that was the end of my slot. I'm just going to pull this down so that I get some of the questions coming up. So first question that's come in, thank you for those. We hear that you have to be very careful when you're talking to the bank at the moment, because historically some of them have had a knee-jerk reaction to businesses asking them for help, and there's a danger that they could pull your overdraft. Is that right? I think that's probably one for you, Andrew.
Thanks, Tim. Yes, this is something that we hear quite a lot, and generally what I would say to businesses is have the discussion with the bank at a very early stage. Banks, by and large, do not just pull the plug. They don't have a knee-jerk reaction. They've learned a lot since the 1990s, when perhaps that was the reputation that they had. But certainly now, particularly if you've got a professional team helping you to look at the situation, to see what your options are, the bank will take confidence from that. And as I said in my presentation, they'll take confidence from the fact that you're presenting them with potential solutions rather than just problems. They may have questions of their own. They may have to refer the business away from your normal business manager to a sort of a special situations manager or a business support manager, but that's no bad thing, because actually those guys have got a lot more flexibility in what they can do and how they can lend than the normal business manager. So do go in with solutions. Do go in preferably with a professional team behind you, but don't be afraid of talking to the bank at an early stage. They really will appreciate it.
Great, thank you, Andrew. And I've got a question on funding, Emma. So get ready for this one, because this has come in live. Could you expand more on the help that Kreston Reeves can provide on the CBILS application? And we've got an email to send Rosa some more information. She's saying we would like to apply for it, but I'm not sure what chances we have in getting it.
We've helped a lot of businesses in their CBILS applications, and obviously it's a case-by-case basis as to whether the funding's available for you. But we've been surprised actually with some of the funding applications that we've had accepted. So as I said earlier, the platform that we've got has access to over 100 lenders. So actually it's quite a broad spectrum there. So I'm happy to follow that up with you afterwards. So thank you.
Great, thank you, Emma. Right, someone thanked Lynsey for the presentation, but said I'm too busy trying to keep the business above water to look for opportunities. What's more important?
Yeah, so obviously if you are struggling, then it's definitely important to look at your survival first, because there's no point focusing on opportunities if your business just won't survive. But I would still recommend looking at your business model, because like I said earlier, if it's just not working, there's no point carrying on with it. You might be able to make some changes, and also having an inner circle maybe, so that then 1 or 2 people could look at opportunities while you focus your time on survival. And actually it might be that you could reassess where you spend your time and look at, if you spend 2 hours a week maybe looking at opportunities, would that help? And just juggle your time a little bit to see if you do have any extra spare hours maybe.
Great, thank you, Lynsey. Another one from Andrew. So we've talked about crisis a lot this morning. How quickly does one typically have to act in a crisis?
Thanks, Tim. Well, Obviously, the crisis that you're facing and the nature of your business will really determine how quickly you need to respond to a situation. For example, if you have a problem with a supply chain, or you have a major customer that goes bust themselves, then you'd have to react quickly to that. I think what I would say generally, though, is that it is important if you get into the point where the business is in distress, and let's face it, a main consequence of that is not having enough money to pay people that you owe money to on a regular basis. And it does become really important when you hit that point to move very quickly, because the decisions that you have to make on a day-to-day basis just become more and more difficult. Do you pay your employees at the end of the month? Do you continue to employ your people if you can't necessarily guarantee that you're going to pay them at the end of the month? So those decisions do become very, very difficult. You tend to come under a lot of pressure from people. So speed is necessary there. But again, this is really just emphasising the point as well that a good runway, a good sort of foresight into difficult times is so important. Can I just pick up, Tim, just on the previous question as well, because I think actually, we should recognise, and I think Lynsey was just recognising it there, that people do get really stressed at the moment. There's a lot of operational stuff that is going on, and people are having to constantly change perhaps their business model. So it's not surprising, that people might feel they haven't got time to do contingency planning or resilience training, etc. And also, you need a bit of downtime at the weekends. But if you can partner up, as Lynsey says, with perhaps some professionals to talk it through, just to take an hour out of your week to talk things through, it can be quite enlightening.
Right. Yes, I'd agree with that. Personally, I have a mentor who's outside the business, who throughout the last 6 months has been, well, I've just been having quick phone calls with him, just so he just checks in with me. Having someone outside the business who you can talk to and who will listen to you is really, really useful. So another question come in now. This one might be because a number of us have talked about acquiring businesses. So I've got a question saying, I have the funding in place. Is now really the time is now really a good time to be thinking about buying a business?
Shall I pick that up? Yeah, that's a really great question, actually. And now is a fantastic time because there are a number of struggling businesses in the marketplace that could really benefit from an injection of capital into the business. And I know that Andrew's taken quite a few inquiries around this. So Andrew, I don't know if you wanted to add a bit to that.
Yeah, certainly. Yes, there are definitely businesses. I think what we're seeing now is businesses starting to run out of money. Businesses at the moment perhaps couldn't get C-bills funding, couldn't get the bounce back loan. They're sort of really struggling to sort of see how they'll get through the next few months. And even businesses that have had a C-bills loan, where their business is really fundamentally impacted by what's happening, for example, in the events arena or something like that they are struggling. So they are looking for solutions. The private equity market is gearing up to actually look at some of these businesses and try and sort of help fund businesses to get through where they've got a sound business model. But there's also opportunities for other SME businesses to look around them to see and to keep in touch with their competitors and other people who are in their line of sight to see if there's an opportunity there.
I would just add as well, obviously, if you reassess your business plans, it may be that you want a significant amount of growth. And if that's doable, then obviously it might be in your business plans to actually acquire. But it's definitely worth looking at your future and what you want out of the next 10 years.
Thank you, everyone. And Andrew mentioned an events business there. I don't think he can see my questions, but we did have a question came in on that. From Rebecca, who said, very uplifting advice, but any advice for a company that offers space for conferences and events? We're based in an area of natural beauty, so we cannot even sell the land for housing. So I think I'll start that because that's a really tough, that's one of the exocet questions that webinar presenters hate. So I mentioned that I do know a business in this kind of events arena who took the decision that they were just going to mothball the business. They're actually a wedding venue, and they've looked at the experience of others. They've looked at people who've tried all sorts of things to get 100 people into a wedding, and decided that's just crazy, that they can't possibly go breaking the law about that. And they've looked at it. They've worked out if they can run a wedding for 15 people profitably. Decided they couldn't, and so they are now just trying to push people into pushing the wedding forward and taking postponements and keeping it ahead and keeping everything moving on, and just having to deal with very upset brides and grooms. So that's a really hard one. I don't know, Andrew, have I given you some time?
Yeah, no, it's very, very useful to hear what you're saying. I think within my world, we all have probably read in the papers about companies doing company voluntary arrangements, particularly in the retail space, where they are looking to downsize property portfolios, etc. But the company voluntary arrangement is actually a tool which could potentially be used in this situation, because if you've got ongoing overheads which are fixed and you can't deal with them, and you're not, for example, getting cooperation from, whether it's from lenders or from landlords, etc., to be able to help with that, and it's getting difficult to persuade people just to sort of stick with you until you can get to the other side of this, then a company voluntary arrangement is a tool which actually forces people, forces your creditors, your suppliers to receive your proposal in a very structured way, and to allow the business to downsize. And it can also actually help to avoid having to pay business rates through to 31st of March next year, because that's a liability that can come into a company voluntary arrangement. So that is a possibility. You know, no business will want to have to look at what is actually an insolvency option, but if it helps you to survive through to next year, when hopefully things will be better, then that's a good thing.
And I think it's fair to say conferencing and events businesses, you know, are one of the ones who've suffered disproportionately to others. And I know people will know I have a great passion for music, and concerts are just a no-go area. But I have seen some live streams. I paid for some live streams. So whether you, Rebecca, need to be putting pressure on your MP to get help for those who are more disproportionately affected than others. I know they're having a tough time in the music industry, but it's always worth a go and could give you some hope as well. So one last question I think I've got from Linda. For the uninitiated among us, could you give a brief explanation of what an L-shaped economy is? I think she meant L-shaped recession. Who would like to say? I think any of the three of us in the growth team could take that one. Who wants to start? Lynsey, you mentioned it.
I mentioned it in mine, so I will start and you can add. So an L-shaped recession, which we saw in 1987, is where you see a sudden drop and it doesn't recover for a while. So we can't see the economy actually starting to recover until September 2021. And this actually, it's something that we've learned about. We have been through with an economist, Darren Sherlock, and he talks about an economic clock, which you can Google, and it talks about a 14-year period of flat in the economy, followed by an 18-year period of growth. So we are in that 18-year period of growth, and in the middle you have a recession of some sort, or something to happen in the economy that sort of makes it a little bit uneasy, and then after that a 10-year significant growth following, which is why, yes, we are in the L-shaped recession because we dropped significantly and we're not recovering yet. But from September 2021 to September 2031, we do foresee it will be 10 years of significant growth, which is probably why we're so keen on people getting their plans together now and really looking at any opportunities so that you're ready for the growth that is going to come hopefully soon.
Thank you,
Lynsey. I think I might just add to that there, because so one of the with the economist Darren Sherlock, who's invested time in looking at all of these trends, has said that actually for those businesses that are able to look at the opportunities earlier on and able to really grow their businesses from the start of that predicted date being September next year, actually by the time they reach the end of that 10 years of growth, their business valuation is likely to be double that of those that might have waited for 18 months. So there's quite a large, well, quite a significant differential between businesses that are able to move earlier on than those who have to wait.
Follow-up question on that. The name of the economic model Lynsey's talking about. So did that mean the economic clock? I think the economic model that covers all this. So if you search on Google, Rosa, for the economic clock, and Darren says that we are about 9:15 on the economic clock. So you will be able to see that that defines the period where there is an upset. In his world, he was predicting commodity prices to fall through the floor and then to rise very sharply. So Google that, and I think then that will be clearer to you. If you're struggling to find it, let us know, because I think we've got some of Darren's slides from previous webinars that we've done that we can send to you, which make it clear. And
sorry, Tim, he did actually mention it in one of our previous Looking Ahead webinars, so maybe we could send the link to that, and Darren talked about it in depth.
Perfect, that'd be good. And the last one is a statement and then a question. Thank you, Peter, who says, great webinar, very informative. What else can I expect from my favourite accountants? Well, Peter, what you can expect from your favourite accountants is we've already got our thinking caps on for the webinar series to start next year. So we'll be looking at what's going on in the business environment, and we'll be tailoring some webinars as well. Keep checking our events page to see, because anything that's coming up will be flagged up there. That's where the action happens, and I know a number of people do. So I think that covers everything that we wanted to cover for now. If you need to contact any of us, our details are there. You can find us through the Kreston Reeves website. And, you know, we're still in some choppy waters, aren't we? So we wish you all the very best of luck, and we look forward to seeing you on one of these webinars next year. Good morning.